Hey gang, we've got a special Money Talks for you today. We're going to get into the latest print on inflation and the world's crazy reaction to that. Then we've got a special for you on all things government and crypto. So if you're really interested in where it's all going, you might find this a little bit of a different take versus what you're seeing out there, but let's get into it. Let's do this. It's time for Money Talks. All right. Hello, welcome. Time for another Money Talks. We're going to do things a little different today. Today, I'm going to do a little bit of a deep dive on all things happening with US government and crypto. Now, not all things. I'm not going to get into stablecoin regulation today. I actually have a bit of a different take on that. I actually think stablecoins are already regulated in the United States, but we're going to talk about a bunch of other stuff going on. I got a whole list of stuff here. I got a list of stuff I didn't even add because it was just too much. Tornado Cash, Bitcoin ESG, SEC investigating Yuga Labs, the makers of the Bored Ape NFTs, and an update on SEC and Ripple. So before we do that, and by the way, we're going to do something there a little bit different as well. We're going to show you some video. I'm going to comment on it. I'm going to read some comments from the press, comment on that. Let me know if you like this format. It's something that I've been working on in the background here to prepare for, and we'll see how it goes. All right, so I want to get into inflation, right? That's what everybody wants to talk about these days. When is it going to top? How is that affecting the markets? How does that affect crypto? And obviously, a lot of you here are focused on price, probably a little bit more than me, but that's fine. We'll talk about that. So I'm going to share my screen here. There's some really interesting comments. People are angry, right? So I was looking at some of the comments on CT Crypto Twitter earlier this morning. I'm up crazy early on Fridays to prepare for Money Talk, since I generally don't have a lot of time on Thursdays. But just look at some of the comments here, right? And it's really crazy. Let me get some of this out of the way so I can actually see what I'm talking about. So inflation top is here, and I think he means HERE, non-American tweets. Yields to fall over coming weeks, dollar to stabilize, correct. Crypto and Bitcoin have relief rally to 30K. Now, of course, this was after, was this after? I guess it was before the rally started yesterday. So I'll give him some benefit for that insight. We'll talk about the rally in a minute, but it's not all rosy. But here's another rosy comment before we get to the non-rosy stuff. The stock and bond markets are now screaming inflation top. We'll see. I'm not so sure. MSNBC. Now this is interesting. Okay, as I said, people are angry. I'm going to stop this share and restart it so that I can give you some video and sound. But before, while I'm doing that, so a couple of things I want you to keep in mind. Is inflation really at a top? We don't know. I think it is. I think all of the leading indicators seem to point to a macro. Kind of a macro top in inflation numbers, but the reality is we don't know for sure. But people are angry, right? And I think part of the problem is that at the end of the day, we trust politicians to do what's right, regardless of short-term anger. Now, let's reconcile the two. If people really are angry about inflation right now, and inflation really has topped, it behooves the incumbents to make very clear why that's the case. And, I just think they're not getting it done, right? I mean, if you look at this, Republicans have a nearly 30-point lead advantage over the Democrats in the top two issues for Americans in the midterms, the economy and inflation, right? Only 32% of Americans approve of Biden's handling of inflation, the top midterm issue in nearly every Senate battleground state, CNN poll found Wednesday. And that was before the current inflation number. Now, I actually think that Biden's getting an unfair look as it relates to inflation, because I don't think he's really to blame for it. I think the Fed is to blame for it. I also think that most presidents get an unfair look when things are going really well, except when they're lowering taxes, as Trump did. But I'm not a Trump fan, mostly because I don't like him as a person, but a lot of his policies turned out to be correct. So when we see that the global economy outlook is bleak, right, from leading economists, it's hard to blame a political party, but they're going to get the blame. There's just no two ways about it, right? We're going to see an economic slowdown. I do think that inflation is going to continue in certain developing markets because they don't have the ability to raise rates and control the macro economy the way the US does. But I do think inflation is going to come down dramatically in the United States next year. Now, I could be wrong. I've said this to you many times over the last pretty much every week for the last 3 months. But I still believe that's the case. And I do believe that inflation has basically peaked and in some cases is falling. If you look at commodities prices, it makes this clear. Now, Dan was on fire last night, Dan Tapiero, who we've had on Money Talks before. WTF, total mess next year. Bank of America says the economy may lose 175,000 jobs per month, right? That's not for the year, that's per month. So the Fed crushes the economy to get lagging CPI data lower. Now, what does that mean? Now, generally, the lagging data for CPI would be things like rent, right? Rent is always going to be the last to come back, right? And so you can't look at that and decide, right, that inflation is not under control. And so that's what they're doing, right? And of course, he believes that as the economy gets crushed, the younger generation will look to the digital asset space. That was interesting comments. And then another comment, in no world is this healthy for capitalism. He's referring to the liquidity of investment grade bonds, blowing up capitalism to make sure the CPI goes down. It's amateur hour in DC at the Fed and executive branch. Again, I do think the executive branch maybe shares some of the blame, but most of the blame here has to go to the Fed. All right. So now, what does this all mean? From a risk-on assets crypto perspective. Well, yesterday we had a bit of a relief rally off the lows, right? If you look at this chart, I'm going to try to zoom in here so you can see it a little bit better. We had. Look at this reversal candle. This is the daily candle, right? So this means this is the low down here, 1150, 1160, 1158, let's say. And this is the high, 1290, well, basically 1300, all right? Now, you can see that we opened at 1290, shot all the way down over the course of the day to 1156 and all the way back up to close very close to the open, which is a very significant reversal. It's generally pretty bullish for a short-term bottom, and we do have some continuation today. We actually were up overnight, over maybe 3.5% for Ethereum, and we've come back down to 1.5%. And the reason is, of course, right, that is a huge swing to go from 1156 to 1340. That's effectively 200 points. For Ethereum, is that right? Is that really 200 points? 1150 to 1330 is 180 point swing. Okay, that is huge. That is a huge swing inside of less than 24 hours. So clearly, a pullback makes sense, and there's probably some short-term profit taking off that massive bounce. It's bullish short-term. If we are really going to get a relief rally, I suspect we could see Ethereum at 3,000, but I don't know if that's happened. I think that as it relates to crypto, I'm going to echo what my friend Mark Yusko has been saying publicly, which is I think we're in a crypto spring. I don't think we're in winter anymore. I think the bottom was June, right? So if we go over here, again, it's, you know, I'm not giving investment advice, but this is my personal take and I'm acting accordingly. I think the low was the 880 here, the intraday low back on June 13th, or was it June 18th? June 18th, sorry. And I don't see us getting down to that level again. And as a result, I do think we're thawing. I think we're in this mushy crypto spring, as Mark calls it. And we'll see. So it means we could chop around here for, you know, a few more weeks going into the end of the year. But if that pause comes, if we get a signal based upon deteriorating conditions coming in here, you know, if we get this coming in, right, this kind of sideways action coming into the new year, and we get a pause coming in here, I think there's a really good chance that we see markets scream significantly higher coming into the new year over here. So, you know, it could happen sooner, it could happen later. I don't see how it doesn't happen because they're going to have no choice but to increase the money supply. Bitcoin, I haven't looked at chart here in a while with you all. Again, similar reversal pattern yesterday, but a reverse of that reversal pattern is happening today, which means that kind of a short-term bearish, you know, spinning top is happening here, and that's usually bad. But it also means the market's confused, right? So Bitcoin is basically at the same price level now for, what is it, July, August, September, October. So that's 4 months, right? So Bitcoin is basically flat, very low volatility for the last 4 months relative to Bitcoin, okay? And stocks have been extremely volatile. The S&P's had days where it's more volatile than Bitcoin in the last few weeks. So that's not something you're going to hear me say very often, all right? All right, so I'm going to stop with this analysis. I want to talk to you about crypto and government for a minute. And then we're going to get into some interesting takes. As I said, we're going to do things a little bit differently today. I've got some comments I'm going to read on different topics. I've got a couple of videos I want to share, which we're going to comment on. If you have some questions or comments on this as we go, please put them in the live stream, and I will try to respond in real time. If you like the format, let me know. If you don't like the format, let me know. It's something that I won't do every week, but I'll try. When I show the video, we may get some intermittent YouTube ads. I don't know how to prevent that from happening, so I'll try to click away from the ads as fast as possible. So bear with me. So we're going to talk about 4 specific issues and or cases, as it may be. And I've got my notes here. The first is Tornado Cash. Tornado Cash is a mixer that basically adds privacy features to Ethereum. We're going to talk about Bitcoin ESG. Now, Bitcoin ESG is not a case per se. There's no government action, at least not yet. But I think it could lead to government actions, and it also has significant issues as it relates to institutions investing and funds and other large organizations investing in certain assets, stocks and crypto, because they now have kind of ESG governance requirements in their investments. SEC Yuga Labs. Yuga Labs is the entity that created the Bored Ape Yacht Club. And they are apparently, now the SEC hasn't confirmed this, but they are apparently being investigated by the SEC for their NFT collections potentially being securities. And then we'll talk about the Ripple case. A lot of things, interesting happenings in regards to Ripple this week. I have my own personal feelings about it, but we'll try to put those aside and dig into what's really going on. All right, let's start with Tornado Cash. Now, as I said, I'm going to show you some videos here on the different topics, and would love to do that. One of the questions I'm getting is, will I be doing an AMA? If there's time, I will do a brief Abra AMA at the end, so tee up your questions. But I'm going to try to get through as much of this as I can today because I think it's really interesting, and we're getting a lot of requests from all of you for updates on this stuff. Okay, especially in light of the fact that Abra is going to be supporting NFTs in the coming weeks. All right, so I'm going to share my screen, and we're going to start with the Tornado Cash. Now, let me remind you all what is going on with Tornado Cash, right? So here's this is going back to August, right? The Treasury Department sanctions Tornado Cash. What does that mean? All right, the OFAC, the Treasury Department sanctions watchdog. Now, it literally means the Office of Foreign Asset Control. Very fancy name of saying the police department of the United States Treasury. They are the group that's generally responsible for implementing sanctions against people and countries, non-U.S. actors, right? Their writ is outside the U.S. They added Tornado Cash back in June to their list of specially designated nationals on allegations it helped North Korea's Lazarus hacking group launder millions of dollars worth of crypto proceeds stolen from various crypto projects. Now, that's interesting, right? Because they say that Tornado Cash is a specially designated national. Tornado Cash is software, right? So I've never heard software referred to as a national. Not only that, one of the developers of the software was arrested in the Netherlands a few days after the sanctions were initiated by the U.S. group. So I'm assuming that there was some coordination between the two. So Congressman Emmer from Minnesota depthly questions OFAC's precedent, saying that the sanctions looked like a divergence from previous OFAC precedents, as some of the addresses added were tied to smart contracts and open source software rather than any specific person or entity. Now, this is really important. Now, we're going to get into this, right? This is more or less the crux of the issue as it relates to Tornado Cash. Now, I want to show you this. Hopefully, you can see this, and let me get this out of the way. This is a video here. Just watch this for 1 second.
Bankless Nation, DeFi is under attack. On Monday, the Office of Foreign Asset Control, OFAC, banned Tornado Cash. What does it mean to ban Tornado Cash? Well, I'm glad you asked, because that's a really, really good question. Taking OFAC at face value, it means that they've added Tornado Cash to its specifically designated nationals list, a running tally of blacklisted people, entities, and cryptocurrency addresses. As a result, all U.S. persons and entities are prohibited from interacting with Tornado Cash or any Ethereum wallet tied to the protocol. Those who do can go to jail. You can go to jail for touching Tornado Cash now. The reasoning behind this move? OFAC stated that Tornado Cash has been the go-to mixer for cyber criminals looking to launder the proceeds of crime, as well as helping to enable hackers, including those currently under U.S. sanctions, to launder the proceeds of their cyber crimes by covering up the origin and transfer of this illicit virtual currency.
All right, so a little dramatic, but maybe not, well, maybe based on your perspective, not dramatic enough, right? So here's the question. The government has, or I should say our Supreme Court has been very clear that software in general is protected free speech. Now, your ability to use that software to conduct crime is not protected by the First Amendment, right? So I can understand, OFAC going after or the DOJ going after specific people who are laundering money, but to blanketly ban software, especially when that software has valid uses for enabling privacy. Okay, and we'll talk about donations to political parties and political activist movements in a moment as part of that. So let me come back to this other comment here. The other thing I want to show you here as we get into the lawsuits, which is really the crux of what I wanted to talk about today in regards to Tornado Cash, is I think, how do you say his name? Peter Van Falkenberg, who I've met a few times, is brilliant. He works for Coin Center. I believe he's a lawyer, but it doesn't matter. And I'm not a lawyer, by the way, so this certainly isn't legal advice, but it is interesting to me. So anyway, I'm going to show you here this comment from Peter at an event. I think it's a security privacy oriented event. This was about 5 days after the FinCEN announcement of the blacklisting of Tornado Cash. So let me bring this up here. So hopefully this is trailing. Hopefully you got this. All right.
Constitutional restriction on your freedom of speech, on your right of expression. So what does that look like? Again, banning software publication is banning speech. We talked about this yesterday, C. Bernstein versus US DOJ. Banning otherwise legal transactions made to maintain one's own privacy and engage in anonymous speech for political purposes is also unconstitutional under the money is speech doctrines established in Buckley v. Vallejo and Citizens United. And even laws that unreasonably chill speech are constitutionally suspect and can be challenged even before enforcement. See Americans for Prosperity versus Bonta. And I will add as a footnote here, if you've looked at the news today, several developers who have worked on software associated with the Tornado Cash protocol have had their GitHub accounts shut down. Now, if that's a business decision of GitHub,
all right, so we can talk about GitHub later, but so the point here that Peter is making, now this is 5 days. They haven't taken any action. There's been no response from FinCEN. This is August 8th. This is 2 months ago, right? His point is that there's no precedent for FinCEN adding open source software, in this case, the addresses of smart contracts on the Ethereum network, to the OFAC sanctions list. Now, let me be clear, Abra is a financial institution. We're a registered MSB with FinCEN. We follow the law. FinCEN blacklists, Tornado Cash addresses. We blacklist Tornado Cash addresses. Whether I like it or not is irrelevant. Okay, I'm not here to basically encourage breaking the law. We follow the law, right? We have a very big compliance team, and we're exactly what we're obliged to do based upon the current status and implementation of legally passed laws. Now, that aside, the question is, should they have done this in the first place, and will this stand the court test that's coming? Right? We'll see. But as I told you, I expected to happen. Coin Center, which is I don't know what you would call it, a policy organization, probably is the right term for crypto, did file a lawsuit against FinCEN, and I will bring up here a tweet storm that Jerry Brito from FinCEN posted 2 days ago. Today, Coin Center filed suit in federal district court against OFAC, challenging its authority to sanction Tornado Cash immutable smart contracts. Interesting choice of words. Not only are we fighting for privacy rights, but if this precedent is allowed to stand, OFAC could add entire protocols like Bitcoin or Ethereum to the sanctions list in the future, thus immediately banning them without any public process whatsoever. This can't go unchallenged. We intend to win this challenge, even if it's necessary to go to the Supreme Court. Now, let me stop right there, all right? Because I think that's actually kind of the key here, pardon the pun, right? So the key here is that I think, I could be wrong, that FinCEN knows that lawsuits are coming, right? I think they also know that if you actually do the math on this, it'll probably take 2 years, 2 to 3 years, maybe, probably 2, based upon other cases I've seen. I've used like RIAA in the music industry as a guide, for the Supreme Court to find this ban unconstitutional, or this sanction unconstitutional, to be more precise. Now, again, I'm not a lawyer. I don't give legal advice. It's just kind of my reading of the tea leaves that it will take 2 years and that the Supreme Court would overturn it. But look at it from OFAC's perspective. That means that they don't have to worry about people using mixers for 2 years, right? So I think that there's some politics at play here, and that's very concerning to me. because ultimately, my biggest concern when it comes to governments is always who will watch the watchers. Ultimately, OFAC is a watcher. They watch what happens and they basically police what happens in order to protect certain American interests. Okay. However, their interests cannot trump the Constitution, and Americans' rights under the Constitution, right? And I think that's what's happening here. And so the question becomes again, who will watch the watchers, right? And anyway, so you can read here on Coin Center's site. It's really, really good. There's an excellent summary. Coin Center suing OFAC over its Tornado Cash sanctions. They basically make, I believe it's 4 claims, right? The first claim is that Congress gave the president very specific powers, and they can block U.S. right? Sanctions can block U.S. persons from transacting with a foreign person or majority foreign entity or the property of that person or entity, right? At no point are we relying on any third party for these transactions, and at no point are we transaction with a sanctioned person. Plainly, given the specific powers granted to the Treasury, these are not the kinds of activities that can be censored or blocked. There's other stuff here that you should read, but the fourth point is probably the most interesting to me. Americans have had their associational activities chilled as once private donations to political causes must now be made public on chain. Our American system relies on certain essential and self-evident rights, among them that you can meet with others to petition the government and contribute to groups and organizations that will further those advocacy efforts. Anyway, I would encourage you to go to Coin Center. You can read it. That is the U.S. and Tornado Cash. I do think that this was a mistake. Now, again, for Abra, it makes no difference. We follow the law, and right now you are banned from using Tornado Cash, and the usage of Tornado Cash has plummeted. So everyone has gotten the message. So I do think it's a bad look, but until the courts work it out, it is what it is. All right. So that's Tornado Cash. And if you have any comments on that, add them to the live stream and we'll get to it in a few minutes. But I want to talk next about Bitcoin and ESG, right? This is a topic that comes up all the time. And it's also because there's so many institutions now that are looking at ESG and have ESG related policy issues, right? Anyway, so by the way, for those of you who are outside the US, ESG refers to environmental, social, and governance. And these are basically issues that certain investor types have to deal with now within their investment portfolios. Right. So this is obviously a very hotly debated issue within the crypto community, as well as policymakers, corporations, other entities around the world. Whether you like it or not, some of you hate this issue, but it's not going away. Like I said, there are many, I don't know if you want to call it funds, family offices, hedge funds that have ESG policies now for how they can invest, and then their investors mandate that they adhere to these ESG policies. And that begs the question of how does this affect crypto and Bitcoin in particular as the largest user of energy within the crypto ecosystem by far, especially now that it's really the only proof of work-based consensus system that we have in the crypto space of any large size. Anyway, there are smaller ones, and then there are those that have kind of mixed consensus algorithms. But by and large, Bitcoin is the vast majority of energy usage now post migration to proof of stake of Ethereum. All right, so the role of governance in investing and in crypto is pretty interesting, right? And it's interesting that, I think the ESG crowd doesn't really understand how, this DAO model works, how they really don't understand how mining works in particular. But I do have some concerns, that there's an over reliance just upon the energy usage number as it relates to ESG and Bitcoin. One of the best pundits on this issue is Nick Carter. Nick has been on Money Talks before. He has written prolifically on all ESG issues related to, or all Bitcoin ESG issues over the past few months. And we had him on Money Talks. There's a show that we did a few months ago. You can go back and watch. But let me show you these comments that he made. I think it was over the summer on this issue. Let me bring this up here again. We may get some intermittent ads from YouTube here. If we do, I apologize. I'll click through them quickly.
Buying power is what we do in order to sort of achieve things. There's not that much we can do without power. So, anybody that sort of fundamentally thinks that way, like me, plugging an outlet and using an appliance is a bad thing. It's there's no discussion to be had. But if you sort of accept the premise, if you look at the numbers, it's fairly small, right? Probably talking about 10 basis points of global energy production end up, going into Bitcoin.
Mm-hmm. Right. So 10 basis points of energy production going to Bitcoin. Now, if Bitcoin really is the hardest money we've ever had, and by hardest money, I mean the truest, soundest monetary system we've ever had, right? We keep finding more gold, and we know in theory we can find gold more or less forever. It's out there. It's out there in the universe, right? We didn't create it. Man didn't create it. So whereas we know that Bitcoin becomes deflationary over time, you could also make the case that maybe Ethereum does, Ethereum's deflationary now, but its monetary policy really is meant to be changeable, not easily changeable, but changeable. Whereas Bitcoin, it's almost impossible, right? Those of us who fought the blockchain wars remember that its monetary policy has become almost unchangeable. So why is this ESG narrative so important then, right? So he's a little boisterous. He's a little, sometimes downright confusing. But I find that Michael Saylor has really found a voice as it relates to Bitcoin and ESG. And then I have a comment on where I think this is headed that I want to mention. But Michael was on what was his Preston Pish's show. I had the honor of being on Preston's show last year. He's awesome. He's probably a top 3 interviewer specifically in the Bitcoin space. He doesn't do broader crypto interviewing, but his interviews are really interesting. If you don't follow him, you should. So I'm going to show you here. Here's a clip of Michael talking to Preston about Bitcoin usage. Again, little hyperbolic, but I think it helps make the point here. So let's see if we can find this. There we go.
It's pretty clear that environmentally, it's the most efficient use of electricity to create value that the human race has come up with. And so on the energy side or the environmental side, it seems to me pretty obviously clean and useful. If you look at the other two, the S and the G, from a societal point of view, you're giving economic empowerment to 8 billion people, digital money to the human race. So it's obviously good for the society. You're banking everybody. And then from a governance point of view, it's a digital asset or a digital network without an issuer.
Yeah.
So corporate governance or governance normally is all about fair governance. And this phrase popped up because there were companies that were thought to be poorly governed.
All right. So very interesting comments. Let me stop this share. Where I think this is going is basically, one, it's not going away. I think the ESG narrative is fine in general, not as it relates to crypto, but I mean as it relates to investing in general. I do think it's reasonable for investors to understand the impact of things we're investing in on the environment around us. We all like a nice place to live, right? So there's nothing wrong with that. We want to be socially responsible. We believe in equality. I'm all for equality. I believe in that as well. But I think the narrative is a little bit lost as it relates to Bitcoin because people don't understand sound money. People don't understand the environmental impact of the existing banking system, right? The existing military industrial complex. Anyway, my point here is that I think what's going to happen is I think that Bitcoin mining is going to be taken over by power utility companies, not as a government play, but as a profit-making play. I think that when you really look at Bitcoin mining, it's best accomplished at the kind of edge of the power grid. And who's closest to that than the power companies? So if you think about every power company in the world basically competing for Bitcoin and processing Bitcoin transactions over the next 50 years, I could basically foresee a model where power companies now make massive investments in upgrades because they know that unutilized power is now going to be utilized for crypto Bitcoin mining, right, and processing transactions, and that will become a very profitable business for them over time, and certainly amortize the costs, investments, if you will, into that infrastructure. So that's my prediction. I wouldn't be surprised to see nuclear power plants and next generation energy providers getting into Bitcoin mining at scale and really pushing out the first generation and second generation mining plays. And I think it's great. I think it will help drive, even potentially drive a revolution and I don't think that's hyperbole, in the electricity industry. Right? Okay. So that's part two. That's ESG. The last two are going to go a little quicker, a little less to say because we're all pretty well informed of what's going on with Ripple and the Yuga Labs situation is just developing. All right. Who is Yuga Labs? So many of you may know that Yuga Labs is the quote unquote company entity, the creator of the Bored Ape Yacht Club NFT collection. The U.S. Securities and Exchange Commission is apparently probing Yuga Labs, this creator of Bored Ape Yacht Club, over whether the sales of its digital assets violate federal law. And this was cited by Bloomberg 2 days ago. And the question, of course, is whether non-fungible tokens known as NFTs are closer to stocks. Now, many of you who've looked at NFTs in any way, be like, well, how can, by definition, if something is non-fungible, right? My share is generally fungible with your share if they're the same class of stock, which makes them fungible, right? So how can two assets that are non-fungible be considered stocks? And why would they then have to follow, equities or securities disclosure rules? So anyway, so this, like I said, the center of this probe, basically, according to Bloomberg, is whether these NFTs are securities. And this is something that the SEC has been looking into since early this year, back in March, apparently. And people who are familiar with what's going on said that the NFT creators and all the crypto exchanges, apparently, that were involved in these marketplaces involved in the swapping of NFTs are also being looked at, because if NFTs are securities, then I suppose the marketplaces would be brokers in securities as well. All right, so a couple of interesting comments that I've seen here. The first is the same gentleman from before, Peter Van Valkenburg. Peter gets a special shout out today. Went on Laura Shin's show last night. I believe it was just released this morning. And I wanted to bring his comments to you right away because I thought it was really interesting. So let me bring this up. And then there's another lawyer who I thought was also really interesting. So let me start with this here.
In general, there's an issue in the crypto community wherein people are very wary, and rightly so, of the enforcement of securities laws for tokens that are fungible, and are not so wary with regard to NFTs. And I think a lot of that comes down to maybe over-reliance on a certain argument as to why an NFT wouldn't be a security. And unfortunately, it means we have to talk about the Howey test, which is the flexible standard for what is a security, which I know your listeners probably are like sick of. But there's these multiple prongs to the Howey test, right? And one of them is common enterprise. And historically, the test for whether you're investing in a common enterprise rather than just sort of like a one-off thing has been whether the profits of all the investors are common. And this is something called horizontal commonality, or whether the profits of you as a holder of one asset are linked and common with the promoter. That's called vertical commonality. Either way, this common enterprise prong relies on this assumption that everybody's boat's kind of rising or falling together. And I think some folks in the NFT space, or maybe even in the legal community, have over-relied on this notion that, well, they're non-fungible. Each one's unique. So how could there be common enterprise? Because my indifferent antelope is going to, be based on its own value of its own unique characteristics and have little to do with your indifferent antelope. And so I think that argument has a lot of vulnerabilities in the sense that a lot of these NFTs that are issued in series, they may have slightly different attributes, but they kind of all rise and fall together with the general enthusiasm that the community has about.
Okay, so very interesting, right? So Peter's basically saying that, now I hadn't considered this before, that these personal, what do you call them? Your icons, your Bored Ape, personal profile pictures are actually potentially passing the part of the Howey test that relates to common enterprise, which means that they could actually be securities, because the expectation is that if one of them goes up in value, they'll all go up in value, and if one of them goes down in value, they'll all go down in value. That's a tough case both ways, right? Now, let's say that I, as an artist, commission a series of prints, right? I basically say, Andy Warhol does, I'm going to do a series of tomato cans. I'm going to do 50 of them, right? And I'm going to sell them all. And they're all variations on a theme, right? Some have Campbell's, some have Heinz, whatever. I'm getting my brands mixed up, but basically I'm doing these 50 prints. Now, historically, I would have guessed that the SEC would not have considered that series of 50 prints a securities offering. As a matter of fact, not being a lawyer, not giving investment advice, I still would have gone out on a limb and say, these are not securities, right? By any stretch of the imagination. So it's interesting that the digital version of that, now the digital version of that may have more benefits to the individual NFT holders that are common, meaning I might become a member in a club, I might get the ERC20 token rewards, for example, but by and large, I have an individual print in the series. It's just digital, and it may give me other rights as well. Now, Warhol could have decided that if you buy this print, you get to have dinner with me once a year, all 50 of you. You could call that a club and say, okay, I'm now in Andy Warhol's club because I get to have dinner with him once a year, or whoever owns the painting, if I sell it, gets to have dinner with him. Does that make that a security offering now because there's a club with common benefits? I don't think so. But again, it's probably because I have a different perception of art, and I'm also not a securities lawyer, right? So now, the other comment which was really interesting there was from a lawyer at I forget where she's from. Maybe it was Skadden, but I think she's also ex-SEC. So let me show you this, and it relates to the definition of an investment contract as opposed to just the common enterprise perspective that Peter brought us. So watch this.
Frequency in the NFT issuer space. And I don't know that the question is really whether they're similar to stocks per se, but if they're investment contracts. And when you understand where investment contracts originated, it was a common law concept that originated across the states well before the Securities and Exchange Commission existed. And when Congress was passing the 33 Act of the Securities Act of 1933, which governs the offer and issuance of securities, they added the investment contract into the definition to capture that common law concept. And then you see the 1946 Howey case where the SEC and, you know, Howey duke it out, and the Supreme Court pretty much sides with the SEC in that case and says that where you have a common enterprise, an exchange of value, and a reasonable expectation of profits based off the efforts of others, that you've created a security, and that it should be issued pursuant to registration or an exemption therefrom.
Okay, so now here we have an and by the way, it was Perkins Coie that she's from, not Skadden, so I apologize to this very intelligent lady. She speaks very, very eloquently about this. And similar to Peter is saying that there's a discussion to be had as to whether these NFTs constitute investment contracts based upon, you know, laws from the 1930s. All right. And she makes a very eloquent argument as to why we should at least consider that the SEC is looking at it this way, and I agree with her. Right, and so I don't think that these are securities at the end of the day. I think that the SEC would have a very difficult time in a court of law the first time somebody holds up a picture of a Bored Ape and says, "I paid $100,000 for this Bored Ape." And then somebody else, they bring up somebody from the art world who has a print on paper and says, I paid $100,000 for the print of this soup can. And I don't know how that works, and I'm not a lawyer in terms of jury versus non-jury cases, but I certainly wouldn't want to be trying to make that case to a jury. It won't go over well. So I also think that Yuga Labs has raised a lot of money, and I don't think that they would just roll over and try to settle with the SEC and say that Bored Ape PFPs are securities. Okay, so my instinct is this is going to go away because I don't think it's a fight that the SEC wants, especially with Ripple going on, and we'll get to Ripple in a second. But if I was the SEC, I would not be picking this fight. And if I was, I wouldn't be starting with Yuga Labs. I wouldn't be starting at the top. Now it's possible they're investigating a bunch of companies in the NFT space. I don't know. Yeah. So by the way, our NFT offering is launching in November. It's a very simple wallet. It allows you to hold NFTs inside the Abra app. Super excited about it. It's really cool. Unlike other companies where you have to have different apps because of the key management issues, where you have your Coinbase wallet and then your kind of Coinbase app, we've merged them into one, and you can move your Ethereum balance between the two balances and then deal with NFTs. The other thing I should mention here is that it's unclear, and somebody mentioned this in the chat. I just saw it. A couple of people actually mentioned the Ape coin. Now, the Ape coin was not sold to the public. It was dropped to existing NFT holders. That's my understanding. I could have that wrong. And so my understanding of the Howey test specifically mentions money being invested. And so it's also difficult to make the case that because you're dropping this, you're not collecting new money, meaning you had already exchanged value for the NFT itself as a print, and that the coin was basically a governance token that was distributed to the early NFT holders, is my understanding. That's another difficult case for the SEC to make versus going after people in the ICO world who literally raised hundreds of millions, or billions of dollars, right? So again, interesting. I don't see either of these cases going anywhere. I'll happily eat crow if it turns out there's an enforcement action and explain why I was wrong. But my guess is it's not going anywhere. Okay. The last thing I wanted to bring up today on the government's action front is the update on the SEC and Ripple. Now, we've talked about this a few times here. 2 years ago, a little less than 2 years ago, the SEC and the Securities and Exchange Commission in the US announced that it had filed an action against Ripple Labs, the original makers, I believe, of XRP, and two of its execs, who are also significant, they claim, securities holders, which I think refers to XRP as a security for the first time publicly, alleging that they raised over $1.3 billion through an unregistered ongoing digital asset security offering. Now, my initial issue with this case is not whether XRP was ever a security or whether there was ever a securities offering. The first sale of XRP, I believe, happened in 2000. I'm trying to remember when I met Chris Larson, the company's co-founder. I think I met Chris in 2005 2013 or 2014. And we were talking about me helping him out in Ripple, and it wasn't interesting to me, even though I was working on money transfer at the time, which and XRP and money transfer is actually an interesting wrinkle to this case, which I'll bring up in a second. Which the point I bring that up, the reason I bring that up is that's 7 years, right, of time in which they were selling XRP, and I'm pretty sure that the SEC didn't find out that Ripple was selling XRP in 2020. And I'm being facetious because it's everyone knows that they knew about this pretty much all along. Why wait 7 years to initiate an action against Ripple Labs? That makes no sense to me, and I don't understand if their concern is investor protection and disclosures. Why wait 7 years? Okay, I don't know that we'll ever know the answer to that. But they do claim that there are specific registration requirements related to this and that Ripple was not complying with them. Now, a whole bunch of updates on the case this week. There's a company called iRemit. Now, iRemit is a company I've known about and I've actually worked with in the past. And when I was working in the remittance space, those of you who are here from Mexico, Philippines, some of the other countries we deal with that receive remittances have probably heard of iRemit. iRemit filed a, I forget what it's called, but basically some type of amicus brief in defense of XRP not being a security, right? The SEC claims Ripple violated the Securities Act because XRP was an investment contract, and that the principal reason for anyone to buy XRP was to speculate on it as an investment. iRemit believes that this is false. iRemit and countless similar companies that use XRP for cross-border transfers on a daily basis are living proof. iRemit does not use XRP to speculate on it, nor does it consider XRP to be an investment whose inherent value is expected to increase over time. Wow. So, I mean, that is pretty damning, right? Because iRemit really, I mean, yeah, I guess they have some financial incentives here, but they don't have to use XRP. As a matter of fact, they are a traditional remittance company of the likes of Western Union, and they can just use banks to settle these transactions. The fact that they're coming out in defense of XRP not being a security in this case is super interesting. All right, so other news there as it relates to Ripple is that Brad Garlinghouse, the CEO, publicly said he expects an answer in the first half of next year. And whether it's the first or second quarter, we'll see, he said. And he also, and by an answer, I mean an answer from the courts as to where this is going and whether they believe XRP is a security or not. He also said this week that Ripple would consider a settlement with the SEC only if the regulator states that XRP is not a security. And the executive stressed that the XRP case is about the entire industry, saying that everyone acknowledges how important this is. He's right in that regard. I have my own feelings about XRP and Ripple, but I can't deny that he's right, and that he's fighting a fight that is really important for the entire crypto space. All right. And then there's some others that believe we actually could get a settlement in the next month. There's some technical court proceedings going on that could cause a settlement to happen before November 15th. I don't understand them all because I'm not a securities lawyer, and we'll see if that happens. But some people believe that that's possible. I don't think we're going to get a settlement this year. I think this is going to drag on until the court makes a decision. I shouldn't say, do I think we're going to get a settlement? If I was a betting person, I would bet against it because I don't think that I don't see Gary Gensler basically willing to back down, and unless he's pushed into a corner by his own enforcement staff saying, we need to settle this, we run a really good chance of losing. I don't think they see it that way right now. So as a result, I don't think either party is incentivized to settle right now. And therefore, it would be up to the courts to decide. And we would probably have a decision sometime next summer would be my guess. Okay, so lots there. We talked about, what did we talk about? Tornado Cash, Bitcoin ESG, Yuga Labs NFTs and as securities, XRP as a security, and security offerings going back 7 years. Bunch of you were asking about our NFT plans. I addressed that. Hopefully you found that interesting. Let me know in either the comments or on YouTube, Facebook, Twitter, if this is a format that you like. And we'll probably do this once a month or so, where I'll dig in a little bit more detail on some of the legal stuff going on, and maybe we'll bring in some of our legal experts at Abra and out in the industry as well. All right, so I've got a couple of minutes left here, and I'm a little tired from all of the prep, but let me see if I can go through some of the questions here. No update on CPERCs. We will do a CPERCs show probably after our trading system launches. And no update. Somebody, when will Abra go public? Damn if I know. We are completely focused on making Abra the most valuable company in the crypto space and to our users. And if that leads to us going public, I think Abra should be a public company at some point. That's not, doesn't mean much, except that's what I think. Because as we become a full bank in multiple jurisdictions, it helps with things like disclosures and investor confidence and whatnot. But, I don't know if and when that will happen. Let's see. When will Amex launch? So we're working on that. We're actually going to be testing the cards here internally in the next few weeks. And so we're working as fast as we can on it. There's multiple parties involved, but it's going well, the process. Amex has been great. Excuse me here. Amex has been great. The banks we're working with have been great to work with. And so I'm really bullish on the product, and no other update other than we're going to be testing it very soon and hope to get it to you as soon as possible after that. Well, I guess that is an update. So, all right. SEC should be disbanded. So that was a comment from Doug. Doug, I don't know that I think the SEC should be disbanded. Maybe that there should be a wholesale kind of rework over how the SEC functions. My biggest concern with agencies that are set up to implement existing laws is checks and balances. If you're a congressman, I had a discussion actually with a congressman yesterday, great guy, right? We don't agree on a lot of issues, but he's willing to talk to me on occasion, and we back channel on crypto and blockchain and all this stuff. And the point I made to him is that if you as a congressman basically go outside of your writs, act unethically, break the law, there's a really good set of checks and balances for dealing with that, right? And you have House ethics committees and things like this, and other ways of getting impeached. And when you're dealing with federal employees, right, who basically you can't fire. I mean, it's almost impossible to fire a civil servant. I was a civil servant for NASA. I learned all this. Okay, it's very difficult to have checks and balances in place that work the same as they do for politicians. So, that's my question. It all boils down to who will watch the watchers, right? Who will watch the watchers is an old expression saying, okay, if this person is responsible for watching what we do as a financial institution, or watching what you do as a consumer, if I'm the police, who watches them? Who oversees the police? Who oversees the SEC? Who oversees the CFTC? And who makes sure that they don't overstep? All right. So that's my comment there. Enough of that. And let's see. Oh, so if you do like this, okay, well, that's good. So I'm glad you do like this, and we'll try to do it maybe once a month or every few weeks. And it's also going to be issue driven, right? I mean, if it's kind of status quo, I'm not going to repeat the same stuff. All right. BlackRock, World Economic Forum, trying to force ESG compliance. Many states rejecting, including Louisiana, Utah, South Carolina, Oklahoma. ESG basically woke. So that's from Eric Jones. Eric, I partially agree with that. I think that people, if the majority of people want ESG compliance within what they're investing in, I don't have a problem with that. I don't really personally look at it that way. I'm not really putting ESG on things. I think that ultimately consumers and businesses will decide with their wallets and their bank accounts what to invest in based upon their own financial incentives. And if we're killing ourselves because we're polluting the atmosphere, it's in our own financial incentive to stop that, right? And I think the broader economy will work itself out over time. And if you look at what's been happening in the US over the last 30 years, our air has gotten cleaner, right? Much cleaner, whether it's, catalytic converters, clean factories, whatever, right? So anyway, I do have major problems with kind of the woke left, especially as it relates to them running cities. But this is an issue where I kind of have mixed feelings about it. All right, so let's see. YouTuber Philion made a great video about Yuga Labs and the BTC scandal. I'm not familiar what the BTC scandal means, but I'll check that out. Tyler, thank you for that. And we are now on the hour. So as I mentioned, we are going to be doing probably a CPERC show after our trading updates. And as you know, we are in the process of upgrading our trading systems now to the new versions that Deepak talked about last week. You can go back and, by the way, great episode last week with Mike Mizels from Abra's new head of research on his Abra Pulse report. I know we're working on Abra Pulse 2.0 already, which is going to have a section on politics and crypto related, not dissimilar to some of the topics we talked about today. So go back and watch that if you're interested in this topic as well. But anyway, Deepak gave us an update last week that said we are in the process of launching and testing the new trading system now, and we'll start rolling it out on a rolling basis in the next couple of weeks, and then everyone should have it within a few weeks after that. So it's happening, folks. Everything we've been talking about, we're going to have a really busy rest of the year rolling out a lot of these new features for you. All right, so I'm going to stop there. It's already past 60 minutes. Thank you to the Abra team, those of you who were involved in helping me prep today for the crypto and government discussion. I hope you all found it interesting, as I said. And who knows, maybe it'll help some of you who need clarity on these issues get that clarity. Again, we don't give legal advice here. We don't give investment advice. We just talk about what we think is interesting. We try to read the tea leaves as we see them and tell you what we're doing for ourselves. And maybe you'll find that useful. All right. So with that, I'm going to say thanks for joining, and we will see you all very soon on the next episode of Money Talks.